What are the top economists in the United States predicting for the real estate market in 2025? That is what we're going to be jumping in today on the Lady Landlords Podcast. So thank you very much for joining me. I just watched this amazing interview with a professor of real estate and finance at the Wharton School of Business, one of the top business schools in the United States through the University of Pennsylvania. And there were some really, really great points that were brought up there that we can look for and expect to see as lady landlords throughout, and then what that means for us, women that buy rental properties. So one of the most interesting points that they talked about in this interview was about how those that recently bought properties, recently being 2020, 2021, 2022, when interest rates were just so low, are really having such a large impact on what the housing market now looks like, even in 2025. One of the reasons for that is because that low interest rate is keeping so many people wanting to be able to stay in their space. They're not wanting to sell. They're not wanting to be able to move. And listen, I kind of can't blame those people. So if you might be actually one of them out there, and I've heard so many lady landlords say this before, where they're saying, but I already have this great rate. I don't want to sell this property. I don't want to move. And even though they would love to possibly live somewhere else, they're just saying, hey, numbers now aren't working by me giving up such a low interest rate. But how is that actually having an impact? Well, one, it's actually keeping supply for the market down. Meaning, since people aren't necessarily moving, since people aren't going to other locations now, there's not as many properties on the market, regardless if it's a primary residence or even a rental property. You might be saying, and depending on your market, that you're not really seeing as many properties as you used to if you've been investing for a couple of years. And that's really just because a lot of people are saying, hey, here's my interest rates. I want to be able to stay there. Especially with what we're seeing with inflation. If all of a sudden now the cost of goods, the cost of food is increasing, well, that's something that people are saying, there's no way I can afford more money on housing. Especially once again, if you're taking, let's make, numbers easy here. If you have a $500,000 house that you own and you're paying a mortgage on and your interest rate is 3%, or then you're saying, well, I could go buy this another $500,000 house, and we'll get to increases in prices over the past couple of years. But now if you're still buying that $500,000 property, but now your interest rate is going to be a 6.5%, 7%, that is going to actually increase what your cost of living is. That coupled then with sale prices, which are also much higher than what we were seeing in the past few years, now you're getting less house and it's costing you more money. So for that reason, a lot of people are not going to move and take on that burden, in addition to now having to have a higher cost of goods and food. And we have to remember, as real estate investors, we are the minority. Most people, most Americans out there are looking for safe, sustainable housing where they could raise their family. Yes, people do not stay in their homes forever like they used to in other generations. People do tend to move a little bit more than they used to. But right now, a lot of people are going to stay put because of what this economy is looking like. What they were talking about in the interview as well is, even with this going on, builders and construction is actually up all across the United States. And I thought that was really interesting here, talking about why we have this lower supply right now. And I actually just got to go check out some new construction, talk with some builders. I shared about it on my Instagram a few weeks ago, so feel free to go to the Becky Nova on Instagram and check out some of my information there. We also have a podcast all about buying new builds or doing developments yourself, so feel free to take a listen there. But what's happening there is that with all this new construction taking place, the biggest problem still is the affordability. So if this new construction is taking place, if these builders are out there actually building new spaces, but yet their affordability of those units, because these builders know interest rates are still at an all-time high, this can actually be creating still a very risky situation here. Builders are making it work purely because of how they can make deals, how they can negotiate. But really one of the biggest things that they are taking a risk on, making a bet on, is that rates will be lowered at a point in time, making new construction a fantastic opportunity for people to really place Americans in homes. So it's interesting to see that that is something that really that construction and new builder world is really kind of counting on. And if they can make deals work now the best they can, then they're really looking for that payoff in a bit of space. The other interesting point they talked about in this interview was actually something that I was talking about here on our Lady Landlords podcast just a few months ago. But what we've also been seeing is with those builders is actually increase in the multifamily market, right? The reason for that, and if you think back to 2020, if you were a landlord back then, you probably saw this too. For me, personally, with my rentals, mostly in New York, I had a huge influx of some of the best qualified tenants I've ever had in 2020, 2021, 2022. Still even kind of seeing it now. The reason for that is because not as many people are able to buy. Okay. They're either not able to buy because back in 2020, lending restrictions were really tightened, and all of a sudden people that were good candidates no longer were able to get loans. Two, now they can't afford property and buying their own with the increased interest rates, with the increased cost of living. All those different things are actually keeping more people renting. So with that, that's why we're seeing even these new builders actually taking on more projects for multifamilies, because there is a better market for those that are coming in that are looking to just rent at this point in time. So that's our good news here as Lady Landlords. But there's also something that a lot of us in Lady Landlords in our Facebook community have been talking about how right now in a lot of places, rents are really staying stable, okay? And in this interview, they were actually talking about how certain rental markets were actually going down. Those comps were actually decreasing. And we've talked about this a lot in the Lady Landlord community because we want to make sure that we're staying with market rents. Well, if you're raising rent to stay with market rent, but yet your market is actually decreasing, you can't continue to raise rents. So it was interesting in the video I was watching was they were specifically named Texas is as a place where either rent are actually staying stable, or in many places in Texas that certain rents are actually going down. And places such as Austin, which had a huge boom over these past couple of years, is now in a position where they actually have oversupply, right? So now when you have that oversupply of apartments, right, and you're talking about that multifamily units, but yet you have that decrease for demand, well, you're having a lot more properties sit empty here, which is then going to actually bring prices back down. So I know we have so many lady landlords in Texas, specifically in our community. So it was very interesting to hear them kind of talking about that. And I know there's other places across the US that are doing this. So if you're listening to this, feel free to drop down in the comments here. What are you seeing in your market? Are you seeing that rents are still going up and increasing? Do you feel that rents have kind of cooled off and are staying stable in your market? Or let me know down in the comments if you feel that your market's actually dropping like they're experiencing a lot in Texas. I will say where my market is still in New York, right outside New York City in Westchester County in the Hudson Valley, I'm personally still seeing rents go up. Not huge, crazy jumps like we were seeing back in 2020 and 2021, but rents are still going up in my market. Still, it's taking less than a month to be able to even find a tenant to move in. Things still move really fast here. But I do also think that the areas that I personally invest in, most people are usually renters, right? In New York City, that is the thing you do is you rent. So I feel like maybe it's a little bit more common in our area, but I'd love to see and share with the rest of the Lady Landlords community what you're seeing in your area down in the comments. What's good about that, though, is at least these rentals are a band-aid solution to being able to keep people in homes, and also the idea of being able to give them affordable homes if we can start seeing some of these rents cool off, stabilize. But as a landlord, it's something that's going to be really important for us to make sure that we understand our comps and to really be experts in our markets when moving forward. So we have a whole episode here on the Lady Landlords podcast all about how to analyze markets. So if you're not feeling like you're an expert in that, do make sure I'll link it down in the show notes, but please make sure to go take a listen to that episode to make sure that you can really understand and grasp those concepts well before buying. I want to make sure that we're buying the best rentals we can. One of the second major points they were talking about in this interview I watched with the Wharton School of Business here was actually about commercial real estate. Now, commercial, personally, not really my space. I like my residential real estate, but I thought it was very helpful to hear how the commercial real estate world still interacted with residential. So in the interview, they were talking about how commercial real estate is finally starting to make a comeback. Okay. The professor that was speaking was kind of saying, hey, this is not a big jump. This is not something we're going to go back to pre-pandemic numbers or see that, not anytime soon, but was really saying that we're starting to see a little bit of a transition. And one of the reasons for that is because of how remote work has changed back in 2020, back in 2021. But absolutely, you were seeing huge jumps with people that were being able to work remotely. That's not stopping. We're not seeing everybody back in offices, but we're still seeing some of the larger commercial spaces still being rented out. That's probably not going to change, but you are starting to see a lot more people that are being called back to the office. Maybe I think over the probably 2023, 2020, I started to hear personally just more people saying, yeah, now I have to go in 1, 2, 3 days a week now. But I feel like now, end of 2024, 2025, there seems to be a lot of initiatives of either having people coming back to the office full time or starting to take more days there and start going back into that. That's going to completely change still what that landscape looks like. Because now, if people were in a place where they maybe needed to buy an owner occupied property where they personally were living in, but they had an extra room because they needed an office, they were working from home, or at least they were home all day, they probably were spending and buying properties differently. But now, knowing not only are they not going to be home all day, but there's no reason to pay for an extra room to have an office if they're not going to be there. So they talked in the video about how in commercial real estate, you're still seeing banks favoring shorter term loans and having better rates there compared to long-term lending, and that those rates are still rather high. And we all know this even on the residential side. What that means, though, is that you still have a lot of people looking for lending. You still have a lot of people that are going out there looking for funds. But right now, handling inflation, the idea is actually to be more strict in lending, really be able to have those higher rates there from banks, because the idea is to push more people into a savings mode. Okay. The reason for that is because we still are not seeing much of a change when it comes to wages. We're not seeing a big change in inflation as many people were really hoping, even in the beginning of 2025 now. And because of that, the economy is really kind of forcing people to be in a position where they need to save money, or at least still be working on more of your basic needs rather than being able to go out and stimulate the economy through other spending and especially taking loans. So the professor of real estate was really saying that she doesn't really see owner occupied rates coming down that much throughout the year. There seems to be enough supply of houses if people do want to be able to buy and be able to make that move. But it's really the rental market that she predicted will be going up later this year. One of the final questions that the interviewer had asked the professor at the Wharton School of Business was probably the big elephant in the room of so many people that bought rentals or bought even their own properties back in 2020, 2021, is what are the chances of actually getting back down to a 3% interest rate? What does that look like? And although she kind of skirted the actual question there, didn't really answer that, and I'll give you mine here in a minute, but she really predicted that if we were lucky, you'd be seeing probably high fives for owner-occupied property at the end of 2025. Now, ladies, purely remember that nobody has a crystal ball here, but she was really predicting about a point and a half lower than what we're seeing right now for the owner-occupied properties. She based her criteria on that. One, really changes in inflation. She was saying that right now, there's a huge growth in the economy, she was stating, and we've been seeing this now for quite a bit of time, quite a few months here, but the inflation is just not being impacted at that same rate, which is actually a good thing. She's saying, hey, with all this growth that we're seeing in the economy, inflation is not growing at that same speed. So that's actually good. She stated that really a lot of people, what many of us want, I think everybody wants, is really a slowdown in that inflation. But we're just not seeing that in that big jump that a lot of people were hoping for. But there is that chance of that slow decline. When that slow decline here, she's really predicting maybe about 0.5% in drop in inflation. And what that would actually do is that's what's going to be the best indicator, she stated, for seeing if interest rates are going to drop. So she already warned, probably do not expect a huge drop in inflation, but really to watch that inflation. And she really said that that was the indicator that we as investors should be looking at within real estate, because if the inflation can slow and start to drop, even by a half a percentage point, that we should be able to get those interest rates dropping. So that was really cool that she gave just a very clear space to kind of look at and what indicators we as Lady Landlords should be thinking about. One of her bases for that was unemployment. We should probably see a little bit of a spike up, but probably not too much of a change there. But also that probably means on the other side, we shouldn't expect wages to really change either. So if many people are going to be still in that same position as they currently are, where cost of goods are still high, really the only way to have the economy be in a spot where interest rates would really drop to then get people out there taking opportunities of lending and opening up some of the supply, having people that have low interest rates actually say, cool, I can sell because I can sell a place at 3% interest rate and I can actually buy a place at 4, and that's not that big of a hit. That she was saying was really going to make a difference on when we should be able to expect interest rates to kind of drop. So I thought that was really interesting. I do want to address the whole, when are we going back to 3%? And like I said, none of us have a crystal ball, but honestly, I am not holding my breath for that. I think our interest rates really dropped that low because many of us were living through a once in a lifetime situation with the pandemic. We probably are not going to see that again. I hope none of us see that again. But I'm really not sitting there expecting interest rates to go back down that low. Historically, they have not been that low before in this lifetime, so I don't really expect to see that. I would love to get back. I feel like pre-pandemic, when I started buying rentals back in 2018, we were in the mid 4s, the low 5s. I think it'd be really nice to be able to get back to there. But once again, if you're sitting there holding out saying, I'm not going to buy and I'm not moving until I get back to 3% interest rates, I'm going to tell you, you're probably going to be waiting a really, really long time for that. But I get it. This year, and really the closing point in this interview with the professor of real estate and finance at Wharton, was about kind of those predictions. And right now, she kind of recommended that this is a place to be able to watch and wait. We're now a few months in to the new year. There's definitely been some shifts here. I think it's really nice to now have some indicators from an economist that we as Lady Landlords can start looking at and make our own decisions about where we can make then our best decisions in our businesses. But I think Lady Landlords, this is an opportunity for us to be able to pivot. If you are still saying, great, I understand there's changes in the economy. Yeah, maybe I'm worried about it, but it is still my goal to be able to move forward. There's still solutions. There's still deals out there to be had, but we need to be able to pivot and find them in very different ways. So I just released an episode about some of what I consider the safest investments for rentals right now. So if you have not listened to that episode, take a listen, go back to that episode so you can start thinking about if it's really that safe investment that you want to be able to take, at least during this point in time, so you can still have progress and still move forward. Or if you're ready to have a conversation about how to pivot and how to be able to grow in this space. Because remember that there are still opportunities, especially right now with so many other investors are sitting on the sidelines. And when so many other people are sitting on the sidelines, it's a great opportunity to get into the game and to be able to really make some great wins. So right now, the choice is yours. So let me know down in the comments here if your plan in 2025 is to be able to pick up another rental property, or if you're saying, nope, I'm going to be sitting on the sidelines this year. Thank you so much for joining me for today's episode of the Lady Landlords Podcast. Please do make sure to hit that subscribe button so you do not miss the next episode of our podcast. We release new episodes every single Tuesday. Thanks so much, and see you back in the Lady Landlords Facebook community.
Thank you for listening to the Lady Landlords Podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlords.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.